Welcome back to Real Estate 101. Today we're going to continue our discussion on insurance and talk a little bit about how you can save some money on your car insurance, and I'm pleased to be joined once again by Robert Atto of Atto Associates. Robert, welcome back to the show.
Joe, thanks for having me back again today.
All right, Robert, so I want to start today's show and I want to ask you, there's been some discussion, as you know, over the last several weeks or so. The government is debating with the idea of trying to reduce car insurance premiums for consumers here in Ontario. What are your thoughts on this?
Well, as you know, the number one issue facing automobile insurance today is fraud. And although I'm quite confident that the insurance companies and the government can work together to reduce fraud and therefore reduce automobile insurance, it's important for you to start saving money today. It's probably a good chance that you're all overpaying for your auto insurance, so I hope I can give everybody a few hints today on how you can accomplish that.
All right, Robert, so why don't you tell our viewers a little bit about Atto Insurance and what you can do to save them some money on their car insurance?
Well, Atto Insurance has been in business for over 25 years, providing low-cost automobile, home, and life travel insurance for the 50-plus generation. Our goal is to put our clients in touch with the best company that provide not only the best cost, but the best combination of coverage and service available today, and to make sure each part is being treated fairly and how they deserve. Our goal, again, is to save you money. Our only business is that of insurance. We don't sell cars, we don't sell homes. Our business is selling insurance. That's what we know. So if you need something, that's why you need to give us a call. This is what we do, and this is all we do.
Okay, Robert, so can you give our viewers a brief explanation of how insurance companies determine their insurance premiums?
Auto insurance can be quite complex, especially how the end premium is determined, but I'll try to break it down and simplify it as much as I can. There's a number of determining facts when it goes into providing your end premium. The first one, of course, would be where you live. So if you live in Toronto or Hamilton, and the claims experience generally associated with insurance companies in those areas. The next would be, of course, is the type of coverage you decide to purchase. The next one would be your driving record. And your driving record would constitute tickets you have or claims of that type. And the next thing would be what you might use your car for. So if you're just using it for pleasure, or you're driving to work, or maybe using the vehicle for business. They then take a multiple of each of these factors that ends up providing you with a rate at the end. So it's important, each of these factors have a little different factors when we get into a little further as we're continuing to talk about how you can save money on your car insurance.
Okay, Robert, so what about the type of car that a consumer may buy? Does that not affect what the rate may be?
Well, it's a good question because everybody always asks, does red make a difference or brown make a difference, or if I'm driving a sports car? But quite simply, the biggest factor contributing to your car insurance is the injury factor, how much you might get injured in a car accident. Of course, other things still come into play, such as theft. So the first thing you should be looking at, maybe when you're purchasing a car, if you're looking to save a little bit because of the type of car and you're not particular on it, would be the safety rating of that car. I think you'll find even in a high-end sports car, if that car is one of the highest safety rating out there available, that you'll actually find that it might be just as cheap as a very low-end car, because they've put a lot of factors into making sure you're safe when you get into a car accident. So the factors you should be looking at when you're trying to consider what car to purchase is not only how safe you're going to be in the car, because that'll really look at what your premium is going to be at the end. So purchase a car that's safe for you and your family. And that's what you could be looking at. You could also give us a call and we can go over the various rates. But most of the time, the color, it doesn't matter, or the type of car, but the safety factors involved have more to do with anything in determining your end price.
And what about driving experience, such as past and prior claims? Does this affect your insurance rate? And if it does, is there anything our viewers can do about it?
Well, your driving record has a great deal to do with your end insurance rate. It's one of the most determining factors. Now, what a lot of people, they don't pay attention to their driving history, which you can always get by calling your insurance company if you're somewhat confused. But it's an important as your credit rating might be when you're purchasing a mortgage. And there's various ways you can go about protecting this. Is if something happens, you can get into an accident, try to determine, obviously get as much information as you can when you're going through a claim, because the fault determination of an accident is very important, and that could cause your insurance to go up considerably. I mean, the other thing might be, is a lot of people don't know, is sometimes when you get into an accident, the police might be confused on the facts. Exactly, they only have a limited amount of time to determine it. So you may get charged with something that maybe you don't deserve. And don't be afraid to go to court and fight it. I know a lot of times, maybe if you're rear-ended would be one of the bigger examples, sometimes you may be charged with careless driving, and that may be a charge that you shouldn't be, you're being charged with unfairly. So it's important to spend the money, protect your history, because it will affect you a great deal, and you'll be glad you spent the $400 or $500 or even more with lawyers nowadays to protect your driving record. It's important to protect it now, because it will save you money in the long run.
All right, Robert, so are there any discounts available for viewers of our shows that need car insurance?
Well, there's many discounts that we've talked about on the show already, and I'll try to go over the main ones. The first, or the biggest one, would be combining your insurance with your home. So your home and auto insurance will provide you about, on a standard, 10 to 15% discount. As you can see on the average $1,500 policy, it saves you quite a bit of money. The next thing would be multi-vehicle discounts. So if there's more than one car in your household, now some people like to split their cars among different insurance companies, but it's important to realize how much money you're losing. Again, there's another 10 or 15% on your car insurance. The other one, a lot of companies offer a loyalty discount. So the longer you stay with an insurance company, they'll give you more of a discount on your renewal. There's such things that the companies build in that you may not be aware of, such as your age. Now, sometimes the policy will go up or down depending on your age. Of course, we all know the younger we are, right, the more your premium might be, and that's to do with more of the inexperience, not to do with age all of a sudden. Right. So it's important that if your company provides age discounts, to make sure that you're getting it. The other thing is important, a lot of people don't realize, is when you retire, there's such a thing as called a retiree discount. And it's about a 15% discount on average off your accident benefits premium, which constitutes about 50% of your premium. So it's important to make sure that you're getting these main coverages. Our main discounts, as you can see, they're almost adding up to 60% by itself. So it's quite a bit of savings, and if you're not getting these discounts already, you should be sure that you are, and review any other discounts that may be available with the insurance companies. But these are some of the main ones that you should make sure you're getting, and that's why it's important to try to group together your insurance to make sure that you're saving the money. It doesn't do you any good by leaving one of your policies with company A and another one with company B, because they don't mind if they're overcharging you. So yeah, so you might as well save the money, and at the same time, the companies will appreciate that you're combining your business all with them, and give you more premium back in your own pocket, I guess, to spend. All right.
Okay, so what about if there's more than one operator in a home and there's only one car? Does that affect, can that affect the insurance policy?
This is, again, a part of us, as there's more operators in your household, and as everyday living happens, somebody might move in with you, or your child might move back with you and then move back out of the house. The more drivers you have on a policy or one car, if you have 2 or 3 drivers, they're going to charge you more because the car is going to be used more. That other person's driving record almost may affect you. The most important part about this is when you're renewing your policy and you see it comes in, look at your policy and say, how many drivers do I have? Because you may forget that your son moved out, that they may have been charging an extra premium for, and if they're overcharging you by $200 or $300 and you try to get back 3 or 4 years from now, you're not going to get it. Yeah. So try to be careful when you're looking at your policies to make sure it's accurate. Quite simply, if they're in the household, they have to be on your policy. Or at least the insurance company should be aware of it. But if they're not in your household, there's no point, and they have their own car insurance, there's no point in you paying extra for it, because each driver will increase the cost of your insurance. In the old days, they kind of combined it together, but now, as you can see, if you think about it logically, the more people you have on the car, the more often that car is going to get used. Therefore, it's a higher risk on the insurance company. But the important thing is to remember, of course, once again, when these people move out, call your insurance company, or at least look at it on your renewal and say, oh yeah, I don't need that person listed on my policy anymore. And again, it could save you 10, 15, 20%, even more, depending if it was a young driver. Young drivers nowadays range anywhere from $600 to $2,000, depending on the type of car you have. Just add them as a casual driver.
Right.
So even if you're going away to, even actually if they're going away to school, far distance, the companies will provide you up to 50% or more discount while they're away at school. So it's important to remember these things. At least look at your policy on when it comes up on renewal and review it and make sure everything's accurate.
Okay, so besides discounts, is there anything else that people should be looking for in order to make sure that they're not overpaying for their insurance?
Well, this goes back to reviewing your policy and looking at everything that's on there. Every year on your renewal, you'll get a declaration sheet, and it'll show what exactly you're being charged for, how many kilometers you're driving to work, how many annual kilometers you're driving, how many drivers are on your policy, as we discussed. Even if you might have forgot to advise the company of a change of address, which could reduce or increase your cost. But like if you're moving from Toronto to Kitchener, of course, Kitchener rate's going to be quite a bit lower because of the lower population involved. So it's important you look at all these factors and make sure they're accurate when it's coming up. I mean, especially the amount of annual driving kilometers. And we were talking about some things like retiree discounts. So you see when you might all of a sudden you're getting to that page and you say, oh, even if you retire early, you can qualify a retiree discount. You just have to sign a form saying you're retired. The reason for this is, you're not going to have the income coverage as if you would when you were working, so the company doesn't have to pay that, so there's a little more reduced cost. So these are the things that you should pay attention. Besides the average discount, is that you think every time things change, and you need to think about these other things in addition to the discounts that are available already on your policy, which could change every year as well. So it's a good thing to take a look at it every year.
Okay, so is there coverage to protect your rates in case of an accident?
Yes, so I'm going to go back and explain a few years ago, because a lot of people sometimes get confused still. There used to be something we called in the insurance industry accident forgiveness, which still applies, but what accident forgiveness meant years ago wasn't that we would totally forgive the accident, is you would go from the top rating to a lower tier, whereas if you didn't have this type of accident forgiveness, you would go right down to zero, meaning 0 years claims experience, which would triple your premium probably. But now in the last 2 or 3 years, insurance companies have come out with what they call a premium protector, a rate protector, and it's especially designed, it's usually in the $75 range. It protects you in case you have an at-fault accident and will guarantee that your rate will not be affected as a result of that accident. Now, a lot of people get confused once again between the two, so they say, no, I already have accident protection. But make sure that what you're really buying here, and I think it's important that everyone consider buying this coverage, because without it, you're probably talking about a 25 to 30% increase on your policy. So forget about what you're paying last year. If you're paying $1,000, there's another $300 at least a year for 6 to 8 years, depending on the insurance company. In some cases, maybe even 9 or 10. So, I mean, I know what $75 seems like a lot up front, but I think it's an important coverage that you really need to consider adding on to your policy, and make sure you have it. Don't get confused by the word accident forgiveness. Make sure what you have is actually protecting your driving record as a result of an accident.
Okay, Robert, so here in Ontario, most people pay their car insurance every month. And some companies charge a fee for that because they pay their insurance every month. Do all companies charge a monthly fee?
Well, all companies don't charge this fee. And here's another bonus normally to adding your home and auto insurance together. Most of the time when you combine these, the insurance company will waive this fee. Most of the time it ranges about 3%. So it's important, and if that's not it, there may be other ways that they'll waive the fee. So you should really make sure, if you are paying this fee, to see if there's any way you can either combine your insurance, or there's any way you can get rid of this. There's no sense paying the extra 3% if you don't have to.
You don't have to.
So, be careful and take a look at this. I mean, it doesn't seem like a lot in the end, but 3% adds up, especially over a number of years. So it's one of the things, another way you can look at saving a few dollars on your car insurance.
All right, Robert, so for today's final question, do you have any last tips or advice for anybody who's about to start shopping for a car insurance policy?
Well, another thing is to, of course, shop around, and that's what's good about calling your insurance broker, because we deal with more than one company, so we can shop around for you. But a lot of times, other than discounts and policy changes, as we discussed before, companies offer other additional enhancements to your policy just for being a client, or just so they're different from another company. I'll give you an example. There's one company we deal with. When you combine your auto and home and you're over 50, they'll actually waive your deductible for your first auto or home claim. Now there's another $500 that you could have saved in your pocket, where the other insurance company doesn't offer that. So it's important when you're looking around to see not only what the premiums on the bottom line, but what other enhancements does that company give you that will save you money tomorrow. And I think that's important. Just don't look at the bottom line, look at what you're getting as a whole.
All right, Robert, thanks for coming on today's show, and I'm looking forward to seeing you again next month.
Well, thanks for having me back again today, Joe. And remember, for everybody out there today, start saving money on your car insurance today. Give us a call at Atto Insurance. You'll be glad you did.
Thanks, Robert. So if you're looking to save money on your car insurance, get in contact with Atto Associates. Thanks for watching today's show, and we'll see you next time.